It is a big event, of course, for UBS and the business here in this part of the world. What have your clients been saying to you about their enthusiasm, their sense of opportunity as they look ahead to the rest of 2021, or indeed their concerns?
I think it is more a long-term optimism, and I would just point to three facts. Firstly, in terms of the proportion of direct financing, China is still very small. We looked at the official number. I think the official direct financing is 15% or so, whereas in the other developed countries it's much higher. In terms of the percentage held by institution on the stock market, whether it is Shenzhen or Shanghai, right now is less than 20%. And then in terms of the foreign ownership of the securities, i.e. debt and equities in China, it is still a very small percentage, even though it has risen quite dramatically from less than 1 trillion to more than 4 trillion now. And then, of course, the Chinese ownership of securities is even less, even at a starting position. So with all that underlying long-term factors, we are very confident, and that has been reflected again and again in the conference. Of course, we will have short-term fluctuations, whether it is due to COVID or geopolitical tension, but I think the long-term rise of China is very clear.
Okay, so how does that leave your priorities for 2021 for the business to capitalize on some of those factors?
I think what we will do is continuing our long-term work in China while not neglecting the rest of the region. What do I mean by that? Firstly, in terms of China, I think UBS enjoyed first mover advantage when we were awarded the first QFII license, and then also the securities partnership, which is now becoming UBS Securities. So those have been working more than decades long. We will continue to be very focused, focusing on the long-term beneficial and also the opening up of China, which is not going to be reversed. So China, whether it is for us in the market side or for the banking side, I think 2021 will be a promising fact. Putting that aside, I think for the rest of the region, Southeast Asia will probably recover from COVID at some point, middle of the road. And then Australia is an important market for us, and so is Japan. So I think there will be different forms of recovery, but fundamentally, I think 2021 will prove to be more optimistic than 2020.
David, how far along are you and your team with conversations with your partners that you share ownership with around the China securities business in terms of taking an increased stake or full ownership of that business?
We are constantly monitoring the situation, and we have had dialogue with our partners. Right now, I can only say that we welcome the opening stance taken by the Chinese authorities, which allow us to own 100%. We will continue to monitor and working towards a greater ownership for ourselves.
When it comes to the asset management side of the business, the chairman of UBS, Axel Weber, told me yesterday he is interested, you are interested in acquisitions within that space. Would you be looking at more traditional banks or internet players, the likes of Tencent, for example?
We think, firstly, China is hugely untapped. As I said earlier, whether it is looking at it from an institutional point of view or from a point of view that the foreign ownership or the ownership of foreign debt and securities. So I think on that front, we think there's huge potential. UBS cannot do it on its own. To tap into such big markets, we need to rely on partners who can provide us with a large existing customer base, and that might be through both the traditional or the non-traditional field. So we are actively thinking about who will be the right partner for us and engaging in early discussions. I think that is a very exciting area, and watch this space.
Watch this space indeed. And of course, there's increased competition here for headcount in the China market. What kind of targets are you looking at, David, to increase your headcount and increase your footprint here?
I think in the short term, we are very well positioned already versus our competitors. So we are some way ahead compared with those who are only starting to form their own joint ventures. But in the longer term, I think there's no question China is the brightest spot in terms of both the size and the growth potential. So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame. That has always been our longer term goal.
What is your view, as the boss of a major Asian investment banking business, of the actions that we've seen, the restrictions in terms of delisting some of these Chinese companies in the US, the executive orders? I just wonder, how complicated does it make it? How much of a risk does it make it in terms of allocating capital to the Chinese market?
Well, on the one hand, it is definitely a nuisance that we could do without. So we have to abide by the rules that US impose upon its own citizen and the rest of the world. So on the one hand, we are looking at those rules very carefully, and depending on exactly the type of executive orders, whether it is to do with Xinjiang, whether it is to do with the military state-owned enterprises, we need to study those rules very carefully and adjust and impose new restrictions. On the other hand, we do see opportunities. So for instance, the whole US return to China, to Hong Kong and to China has given us great opportunity in terms of new shares offerings for 2020, and I expect that to continue in 2021. But even with all these restrictions in place and these new opportunities, we're still seeing some of our Chinese companies still wanting to go to the US. And these might be in sectors that they felt they could list either quicker or getting better valuation. So we are also working on that. So overall, as long as they come through the platform of UBS, whether it is in the domestic Asia, Hong Kong, or US, we think it will be beneficial for the UBS platform.
Will China stick to its pledges around financial sector opening and reform if relationships with the US continue to deteriorate?
First of all, I think as I'm in line with most of the general expectation, is that the US-China relationship will become more stable with the new administration. Not necessarily better in the short term, but certainly within this year, I would expect that it will become more stable. So in that respect, I don't expect to see a deterioration like what we have seen in the last sort of 18 months to 2 years. Having said that, I don't think there will be a dramatic recovery either. And so we are going through a consolidation period where we think that the two sides will carefully gauge each other and try to avoid open confrontation. So in that respect, we actually welcome, and hopefully this will be a period when 2021 will be relatively calm. The two sides have still got a whole host of important issues to deal with together, whether it is the climate change, whether it is trade, and so on. So I do think that
David,
significant upside. Yes.
I just want to get your views quickly before we let you go on the IPO pipeline. and how it's going to differ in the mainland and Hong Kong? What is your forecast?
I think it's more or less the same as last year. So in the Hong Kong side, it will be very strong, driven by healthcare, by consumer, by US return in terms of tech listing in Hong Kong. And in the China side, the STAR board, the GEM board relaxation will trigger a whole host of new companies. So in terms of the number of offerings, it will be significant. And these will both be good opportunity for investment bank, both UBS and also our competitors.